Now, in today's class, we're going to cover these 7 requirements. We already completed 1 requirement yesterday. Now, the idea of this revision course is not to give you or tell you the answers to the questions. That is just simply not the idea. The idea is to teach you the train of thought, thinking process that you have to use to arrive at your answers. Remember, even in yesterday's class, I did not tell you the answers straight away. I told you where you can find the answers in my notes, even though they were knowledge-based questions. So that is the approach which we're going to follow throughout the revision course. So we're going to do an exam question, this scenario which relates to 7 requirements today. Then tomorrow's class, we're going to do 2 other questions, full-fledged questions of section B. And then in our class on Sunday, we're going to do a number of multiple choice or objective type questions so that you can gain a flavor of how they look like. And so through this practice session, through this revision session, I am quite confident that you would be holistically prepared for the paper. And not just that, let's be very clear on this, that even after the culmination of the revision course, of the practice course, my support would be available to you till the last minute before your exam. So your queries, your questions, any ambiguities that you would have, they would still be answered, right? So, I mean, the revision course is not going to be the end of things. You can always pick, put up your questions through the WhatsApp group, and we can even arrange additional classes to support. Okay. Now, if you look at this question, now the first question that we're going to focus on now is part B. In respect of the internal controls of Frisia Co, identify and explain 6 deficiencies. Recommend a control to address each of these deficiencies and describe a test of control the external auditor should perform to assess if each of these controls, if implemented, the controls that you recommended, if the management implements that control, how are you going to test them? How are you going to test the operating effectiveness of those controls? So there are 18 marks. Now, always learn to understand the split. 18 marks looks like overwhelming, but that's not the case. There are 3 parts, which means 6 marks each. And then, because you have to talk about 6 deficiencies, 6 controls, and 6 tests of control, so effectively 18 points or 18 sentences are required. So now let us focus on this scenario. And again, the approach would be, as and when we're going to pick something related to the answer, I'm going to park it over here in my answer. I'll just park the relevant deficiency. So while I'm thinking when I will be reading the scenario, please keep in mind, I'm not reading a story book. I'm reading an exam scenario, and the purpose is to identify, explain deficiency. So I'm going to keep in mind, I'm going to maintain skepticism. While reading, I would have to remain alert if at all this shows this particular point is a deficiency. So the scenario relates to 7 requirements. Frisia Co is a company listed on a stock exchange. Okay, so we're talking about a listed company. It manufactures furniture, which it supplies to a wide range of retailers across the region. The company has an internal audit department, and the company's year end is 30th June 2009. So in this scenario, what you've been told is that the company's year end is 30th June 2009. Now I'm going to keep that in mind. And you know the reason why it is important to keep the year end in mind, because that helps with identifying events after the reporting period. It helps with identifying if there are any issues that require time apportionment, and also guide you on where you are in the auditing process. You are an audit supervisor with Xenia & Co, which is the audit firm. preparing the draft audit programs, and reviewing extracts from the internal controls documentation in preparation for the interim audit. So you're preparing audit programs. Now, the first question is, what exactly is an audit program? So the answer is, what is an audit program? That is the audit procedures that an auditor plans to perform. What test of controls an auditor plans to perform, what substantive procedures the auditor plans to perform. So that is what an audit program is. And you have also been given this internal controls documentation about sales, about purchases and inventory, and about payroll. Now, if I go back, what is the format? What is the format of these, or what is the method of this internal controls documentation? Are these narrative notes or a questionnaire? So these are narrative notes. So the controls have been documented in the form of narrative notes. You could also convert them into a flow chart. You could convert them into questionnaires, ICQs, ICEQs, whatever method you choose to use. Now, when I would be reading the scenario, I would be looking at any deficiencies. And as soon as I'm going to find any relevant deficiency, I'm going to park it over here in my answer script. Prisia Co generates revenue through visits by its sales staff to customers' premises. Sales ledger clerks who work at head office carry out credit checks on new customers prior to being accepted and then set their credit limits. Remember, I told you when evaluating the systems, you need to keep in mind if the control is being exercised by the right person. Is he senior enough? So I'm in sales ledger clerks determining or setting credit limits for new customers. I see this is problematic. Okay. Sales staff visit retail customers' sites personally, and orders are completed using a 4-part pre-printed order form. 1 copy is left for the customer. A 2nd copy is returned to the sales ordering department. The 3rd is sent to the warehouse, and the 4th to the finance department at the head office. Each sales order number is based on the salesperson's own identification number in order to facilitate monitoring of sales staff performance. So what is the deficiency? Sales order number is based on salesperson's own identification number. So there's no sequence as such. Okay. Retail customers are given payment terms of 30 days, and most customers choose to pay their invoices by bank transfer. Each day, Lily Shah, a finance clerk, posts the bank transfer receipts from the bank statements to the cash book and updates the sales ledger. On a monthly basis, she performs the bank reconciliation statement. So, I mean, a number of tasks Lily Shah, or you could say finance clerk, is undertaking posting of bank receipts, sales ledger updation, and bank reconciliation statement. Bank reconciliation statement. Please do not worry too much about the spelling errors because you're not going to get any deduction of marks for that. Okay, so I've posted another thing which I've looks like this is a weakness. Okay, the company purchases and inventory. Receipts of raw materials and goods from suppliers are processed by the warehouse team at head office, who agree the delivery to the purchase order, check the quantity and quality of goods. Sometimes the issue is that quality is not checked, but over here that's not the issue. And complete a sequentially numbered goods received note. What is the benefit of sequentially numbered goods received note? It gives you comfort over completeness. The GRNs are sent to the finance department daily on receipt of the purchase invoice from the supplier, Camilla Brown. The purchase ledger clerk matches it to the GRN and order, and the 3 documents are sent for authorization by the appropriate individual. Looks everything is good. Once authorized, the purchase invoices are logged into the purchase ledger by Camilla, who utilizes document count controls to ensure the correct number of invoices has been input. What is a document count control? If I have a batch of 10 invoices, and if I want to check if all the invoices have been entered, what I can do is once I've entered them in the system, I could perform a check in the system and I could see if the system has recorded 10 invoices or not. Now, there's some problem with this as well. So I'm just copying this, that purchase invoices logged into purchase ledger and document count control used for complete invoice entry, input or entry, whatever you could say. The company values its inventory using standard costs, both for internal management reporting and for inclusion in the year-end financial statements. The basis of the standard cost was reviewed approximately 18 months ago. Now, the first question over here is an accounting question. Is standard costs an acceptable method of valuing inventory in the light of IAS 2 or not? The answer is it is an acceptable method. Standard cost method is acceptable, but there is a qualification. There is a qualification to its use. Standard cost is an acceptable method for inventory valuation, but that comes with a qualification. And what is that qualification? Very natural qualification that standard costs can be used for inventory valuation where they approximate actual costs, where they're close to the actual costs. But if you look at the problem over here is that standard costs were reviewed some 18 months ago. So potentially that's no more a relevant standard, or standard costs no more approximate the actual cost. So standard costs used for inventory valuation last updated 18 months ago. So I'm just sparking the relevant deficiencies of whatever looks to me like a deficiency. Payroll. Presiaco employs a mixture of factory staff who work a standard shift of 8 hours a day and administration and sales staff who are salaried. All staff are paid monthly by bank transfer. Occasionally, overtime is required of factory staff. Where this occurs, details of overtime work per employee is collated and submitted to the payroll department by a production clerk. The payroll department pays this overtime in the month it occurs. At the end of each quarter, the company's payroll department sends overtime reports which detail the amount of overtime worked to the production director for their review. The problem is that overtime approval or review by the production director is done after payment. That is an issue. So this is another issue that we've noted. Let me see how many deficiencies I've been able to identify by now. 1, 2, 3, 4, 5, 6. So the count is over. But as I told you, there are more than the required, but I'm not going to worry about it. I'm not even going to take the trouble to read the remaining scenario unless I'm unsure on some of my identified deficiencies. I'm not going to read the rest of the scenario because I had to pinpoint 6 deficiencies. I've done that. Now, this is the first part of the answer. How many of you think we're done with the Roman 1? The problem is we're not yet done with the first part. We're just done with part of it. What part are we done with? We're done with the identification. What do we mean by identification? Copy pasting the relevant issue from the scenario. That is what I did. I copy pasted all the deficiencies from the scenario. But up till this point, how many marks have I been able to earn? 3 marks, because there's a 0.5 mark for identification. Now, how to get the full marks for that? You would have to explain the deficiency, and in explaining the deficiency, you have to explain why is it a deficiency or what could be the side effects of this deficiency. So now I'm going to talk about that. Now, when I say sales ledger clerk setting credit limits for new customers, now after full stop, I'll be explaining this. So I'll be saying they are too inexperienced to set an appropriate limit, and consequently, there could be bad debts or irrecoverable debts due to setting too high limits. This is your explanation. How is that going to create trouble for the entity? I mean, entity would have bad debts, cash flow problems, profitability dented. So that is what you need to take. And that's how you're supposed to explain the identified deficiency. Look at another deficiency. Sales order number is based on salesperson's own identification number. So they're randomly assigning numbers. The problem is, as a result or consequently, there is no logical sequencing and completeness of sales orders could be an issue. Right? So that is how you describe the or explain the deficiency. Finance clerk is undertaking posting of bank receipts, sales ledger updation, and bank reconciliation statement. The problem over here is due to lack of segregation of duties Due to lack of segregation of duties, errors could be overlooked / not identified. Not just errors. Remember that Tinkerbell question we did in our classroom? If there's a lack of segregation of duties, there is also a scope for committing fraud. So this is the explanation, the consequences. Purchase invoices logged into purchase ledger and document count control is used for complete invoice input. Now, while the count could be correct, there could be errors in the values, the amount, the dollar amount of invoice that you've entered. So the problem is that errors in invoice value cannot be spotted by mere counting checks. So the dollar value errors may not be spotted. For example, if an invoice was for $150 and you mistakenly entered $510, now the document count is still going to be correct, but there's a mistake. By mere counting checks, they may not be spotted, this could result in material, immaterial, rather than saying material, immaterial, resulting in misstatements or resulting in potential misstatements. What else? Standard cost used for inventory valuation last updated 8 months ago. So the standards may not be updated and therefore not a close approximation of actual costs, leading to breach of IS2 and misstatement, because I'm not sure if it's going to be overstatement, understatement. When I'm uncertain, I just say misstatement of inventory number. So this is your explanation. Why, if standards have not been updated, why is that a problem? I mean, if because of this control deficiency, there could be material misstatement in the inventory number. What else? Overtime approval review by the production director is done after that has been paid. So that's like too late in the process. So this means, or this would lead to, this may result in. So I want to give you a natural look rather than a prepared answer. This may result in payments made that are subsequently disapproved by the production director, causing loss to the entity or to free CRCO. So that is how you identify. This part is identification. This part is identification, and this part of the answer is its explanation of the deficiency, which clarifies why the identified deficiency is actually a deficiency. So if you're missing on the second part, you would be losing on marks.